Reklamador kami pero may pangarap. Hello, good morning, and welcome to our presentation. Today, we will be discussing the fascinating topic, the Week 14 Partnership and Partners.
Income taxation of partnerships and partners. We have here the two kinds of partnerships: general professional partnerships and taxable partnerships. General professional partnerships are formed by persons for sole purpose of exercising their common profession, no part of the income of which is derived from engaging in any trade or business. A GPP as such shall not be subject to income tax, and also persons engaged in business as partners in a GPP shall be liable for income tax only in their separate and individual capacities. For purposes of computing the distributive share of partners, the net income of partnership shall be computed in the same manner as a corporation. Each partner shall report as gross income his distributive share, actually or constructively received in the net income of the partnership under Section 26 Tax Code. Section 26 of the Tax Code, as amended, states that the general professional partnership is exempt from income tax. This means that the partnership itself is not subject to income tax. However, the individual partners who engage in business as partners and the general professional partnership are solely responsible for paying income tax in their separate and individual capacities. It is important to note that the specific regulations and requirements for general professional partnerships may differ depending on the country or region. It is recommended to consult the official tax regulations and seek professional advice to understand the specific regulations and obligations applicable to general professional partnerships in your jurisdiction.
Illustration 1. Arthur is a partner of a GPP. The partnership had the following information for taxable year 2020. Gross income 1 million, expenses 100,000, interest income net of final taxes 20,000, dividend income from a domestic corporation 10,000. How much is the partnership income tax due? 0, since the partnership is a GPP if it is exempt from the regular corporate income tax. Gross income has 1 million pesos, expenses is 100,000. Net income from operations subtract 1 million pesos and 100,000 equals 900,000. Interest income 20,000 already subject to final tax and not included in the computation of net income for distribution. Dividend income from a domestic corporation 10,000 also subject to final tax and not included in the net income for distribution. Net income available for distribution to the partners is the net income from operations, which is 930,000. The GPP itself does not pay income tax on the 900,000 net income. This 900,000 is distributed to the partners such as Arthur, who will then include their share of the partnership income in their individual tax returns. Since the GPP is exempt from the regular corporate income tax, the partnership itself does not pay any income tax. The partners, including Arthur, will declare their respective shares of the net income 900,000 on their individual tax returns and pay the corresponding income tax based on their individual tax brackets and applicable personal deductions and exemptions. Arthur's shares in the partnership income is 1/3, and he also has trading business of his own. The following data pertaining to taxable year 2020 were provided. Gross income trading business 500,000, expenses trading business 100,000, interest income Maybank 20,000, salaries as part-time teacher, gross of withholding tax 100,000. How much is Arthur's shares in the partnership profits? 300,000 pesos. The amount to be included in the partner's taxable income shall be based only on the income from operations of the partnership and not actual distributable income. How much is Arthur's taxable income? Arthur's shares in the net income of GPP. Gross income from GPP has 1 million pesos, less expenses from GPP 100,000. Net income from GPP 1 million pesos subtract to 100,000 pesos equals 900,000 pesos. Arthur shares one-third of net income. One-third times 900,000
So Arthur's
equals
taxable income is 800,000.
Income from trading business. Gross income has 500,000 pesos, less expenses has 100,000 pesos. Net income from trading business has 500,000 pesos subject to 100,000 pesos equals 400,000 pesos. Arthur's total taxable income. Arthur shares from GPP net income 300,000 pesos. Net income from trading business 400,000 pesos. Salary as part-time teacher is 100,000 pesos. And we total all of the taxable income. The result is 800,000 pesos. Therefore, Arthur's taxable income for the year 2020 is 800,000 pesos.
Hi everyone, good morning. My name is Johnny C. Ayag and this is the continuation of the week 14 topic, taxable partnerships. Partnership refers to a type of business or entity where two or more individuals or entities come together to carry out trade or business venture. For tax purposes, taxable partnership are taxed in all aspects similar to a corporation. Partnership considered as corporation, as if a corporation. So, it is also required to file a cumulative quarterly declaration in a final return just like a corporation. Accordingly, it may claim itemized and optional standard deduction subject to the same applicable rules for corporations. And partnership itself is subject to 20% corporate tax. They are also subject to the rules on final tax, capital gain tax, and minimum corporate income tax except improperly accumulated earning tax, which has now been repealed under the CREATE law. CREATE law that stands for Corporate Recovery and Tax Incentives for Enterprises makes the Philippines more competitive in Asia by lowering the corporate income taxes to 25% and 20% for small, medium, and micro enterprises or SMMEs that is effective last July 1, 2020. And now let's move on the exciting part, the illustration and the calculation. Illustration number 1. A business partnership organized by partners Tom and Jerry, equal partners, has the following data for calendar year ended 2019. Gross business income, 1 million. So gross business income is the income generated by the partnership during the tax year. Deductible expenses, 300,000. Deductible expenses such as operating expenses, salaries, and depreciation. And we have the yield from deposit substitute, which is 62,500. So yield from deposit substitute, interest on Philippine currency deposit and yield, or any other monetary benefit from deposit substitute and from trust fund and similar arrangement received by the domestic corporation and royalties. That is derived from the source within the Philippines and shall be subject to the 20% tax. Withdrawal on the share in the net income of the partners, so we have 150,000. It happens when partners decide to withdraw from partnership. It means that they are leaving the business and ending their involvement in its operation and decision making. This could be due to the various reasons such as retirement, personal circumstances, or pursuing other opportunities. The withdrawal process typically involves setting any outstanding financial obligation and redistributing the partner's shares of assets or profits according to the partnership agreement. So we have rent income, 300,000, and quarterly payments of income tax, 120,000. And this is how we compute the taxable income, income tax, and distributable income. Gross business income, 1 million, and less the deductible expenses, 300,000. Add the rent income because this is the additional income of their partnership. So we have taxable income of 1 million. And we're going to multiply by its rate, the 30% corporate income tax rate. So we have 300,000. Why we are using the 30% income tax rate and not the 20% tax rate? It because this example is in the year 2019. while the 20% under the create law is effective only on July 1, 2020. So it's not applicable in this example, but we have another example later on. So taxable income 1 million minus the income tax rate that 300,000. So we have the net income from operation net of tax 700,000. And then add the yield from deposit substitute, the 62,500 with 20% tax as what I said before. So 20% of 62,500 is 12,500. So 62,500 minus the 12,500. That's why we have the yield from deposit substitute net of 50,000, and we will gonna add the net of tax 700,000. So we have distributable tax of 750,000 pesos. Distributable income will be the net income or the taxable income after tax plus passive income, net of tax and income except from tax if any. The distributable income shall be distributed to the partners based on their profit sharing agreement. In this case, Tom and Jerry will each get 375,000 as their share in the income of the partnership. The share in the net income of the taxable partnership shall be subjected to a final tax of 10%, similar to the dividends. Since a taxable partnership is treated as a corporation in all material respect, thus the share of partner in the net income of a taxable partnership is no longer included in the computation of the individual income of tax of the partners. Accordingly, Tom and Jerry would each receive cash of 337,500. Their share in the profit of the partnership, 375,000 less 10% of final tax. So there are 37,500, which is remitted by the partnership to BIR. If the partner is non-resident alien engaged in trade or business in the Philippines, it is subject to 25% final tax. So the second illustration, a business partnership organized by partners Tom and Jerry, not equal in share. Jerry has 60% share while Tom, non-resident alien engaged in trade or business, 40% share. The following data for the calendar year ended 2022. So as you can see, same data as used in the illustration 1. Taxable income and distributable income computed as follow. Gross business income na 1 million less the deductible expenses the 300,000, add the rent income 300,000. Total taxable income 1 million less the income tax rate 20%. So we have the net income from operation or net of tax 800,000. Add the yield from deposit substitute net na 50,000. So we have distributable income of 850,000. So in the final tax, the distributable income is 850,000. So Jerry has the 60% share. So he has the 510,000 less the final tax 10% because he is a resident citizen. So he has the net income of 459,000 pesos. While Tom's 40% share, so he has 340,000 distributable income less the final tax of 20% because Tom is a non-resident alien engaged in trade or business. So he has the net income of 272,000 pesos. Thank you everyone, and hoping that you have learned something from our presentation.